Well, welcome to the first of Denton's webinars on Brexit and what this means for the insurance market. I am Martin Mankabardi. I am a corporate insurance partner here in London, and I'm also one of the global insurance practice leaders. So, the greatest constitutional crisis in modern times. This is how Lord Heseltine, who was Deputy Prime Minister in Lady Thatcher's government, has described the UK electorate's decision to leave the European Union. And it's probably fair to say that the consequences of that vote, not only politically, but also economically and socially, will be felt for many years to come. So over the next 20-25 minutes, I'm going to be looking at how we got here, where we are now, where we might end up, what this means for you in the insurance market, and what we can do to help you. So firstly, how did we end up here? Well, our Prime Minister, David Cameron, called a referendum on whether or not to remain in the European Union a little while back. And he did this to lance the festering boil around our whole relationship with the European Union and to appease the right wing of his Conservative Party, which is increasingly Eurosceptic, and also to appease a growing mood in the nation that was feeling disaffected about our relationship and was supporting the UK Independence Party in increasing droves. Did David Cameron have to call a referendum? Personally, I don't think he did. There was a suggestion at the time that if he didn't do that, he would face a leadership challenge. Again, personally, I don't think that would have come to pass. So what is the concern about holding referendums in the UK? Well, it's not something that we do that often here. In fact, Clement Attlee, who was Prime Minister of the UK back in 1945, said that when he was speaking about referenda, that they were alien to all of our traditions in this country. And the problem with referendum is that people often use it as an excuse to voice other frustrations and to use it to send a message, but not necessarily around whatever question they are voting on. And many of these questions can be quite complex and do not lend themselves to a binary yes or no. Anyhow, we are where we are. We've got a decision by a fairly slim majority, 52% to 48%, to leave the European Union. So where are we now? Well, we are in a very uncertain time. There is a great deal of political uncertainty, in fact, political turmoil. The Prime Minister, David Cameron, has resigned. The leader of the opposition, Jeremy Corbyn, has resoundingly lost a vote of no confidence. And the person who we all thought would be the next Prime Minister, Boris Johnson, has decided not to put his name forward for that role. So we're now looking at a battle for the new Prime Minister. And until we know who that is going to be, we don't really have a clear idea of how things might pan out. So we have a government, but in all but name, we've got a political vacuum. There is also a great deal of economic uncertainty. And when there is economic uncertainty, that means that people think twice about investing, they think twice about doing deals. So that's not a great position to be in. And finally, there's the whole issue around social cohesion in this country. And it seems as though the gap between the north and the south of this country seems ever wider. The gap between the have-nots and the haves also seems ever wider. And there are only isolated examples, but some examples of increased racial tension in this country. So not a great situation to be in right now. But against that, where might we head? Well, there's been a lot of discussion around triggering Article 50. And Article 50 is a section in the Treaty of the European Union. And Article 50 prescribes the mechanism for a member state serving notice on the European Union to exit the Union. And there's been a great deal of debate in this country, and it continues apace, as to whether before you can trigger Article 50, you need a vote in favour in Parliament, or whether in fact you might need a new Act of Parliament, or whether the Prime Minister of the day can simply decide to give that notice. That debate rumbles on. There are some who have even suggested that we may never see a triggering of Article 50. My view is that we have to assume that Article 50 will be triggered at some point. The likely new Prime Minister, as we sit here today, but things could change tomorrow, is that Theresa May will be that new Prime Minister. And she's made it very clear that Brexit means Brexit. And she said that means no second referendum, that means no backdoor entry into the EU, that means coming out of the EU. So I think that for present purposes, we have to assume that that Article 50 will be triggered at some point. The only question is when. What there hasn't been a great deal of debate around is what the form of that exit might take. And I think it can only be hoped that when we have settled the issue around who's going to be the next Prime Minister, there'll be more focus around that piece of the issue. So let's move on to where we might end up. If you take the analogy of a marriage, and the parties to that marriage decide that it's not working, that one of them or both of them want to get out, there are different ways of bringing that relationship to an end. You could go for a full-blown divorce. You could look at a separation where there may still be some ongoing contact, or you could look at a different kind of relationship, perhaps a more open, more freer relationship. And that's the kind of situation we're in right now. There's a vote to exit the European Union, but nobody really knows what that will look like. And I think that what we're going to see over the weeks to come is an increasing focus on that aspect, on the form of that exit and the timing of it. Now, in terms of the form of it, there's been discussion around whether we will go down the route of the Norwegian model, where Norway is a member of the EEA, European Economic Area, and it has access to the single market, but it also has to accept free movement of people. It doesn't have a seat around the table, but it has to make a full contribution. Is that the model we're going to go down? Or will we look at the Swiss model, where they have secured a number of bilateral treaties? They don't have full access to the single market, but at the same time, they're not subject to all the other things that go with being a member of the single market. I suspect that none of those models will work for us, and that assuming we do agree a new trading relationship with the EU, it will have to be a new British model. One of the key things that came out of the decision to leave the European Union in the referendum in the UK was that there was a concern around immigration. And I suspect, therefore, that we can't simply sign up to what we have now, because that will bring with it unfettered, the possibility of unfettered immigration into the UK from the EU. And that seems to be an issue. But if we're going to trade on that point, we can't expect to have unfettered access to the single market and all the benefits that flow from that. So that is the real conundrum. Will there be any scope for negotiation? Will there be some flexibility? Well, the EU is talking tough, Germany is talking tough, but you can't help but think there will be some scope for negotiation and some flexibility down the line. And this brings up the whole issue around timing of Article 50. There are some on the Leave side who are saying we should just get on with it, we should just trigger that Article 50 now, whether or not that requires a vote in Parliament, whether or not it requires an act of Parliament, just to get on with it, and you then have 2 years in which to negotiate a withdrawal. And if in that time we can secure some kind of deal with the European Union, then great, but if not, let's just get on with it, let's just exit, and that will then bring to an end the uncertainty. Now, there is some merit in that, but on the other hand, once you trigger Article 50, the clock is on. The clock is clicking down to a time when in 2 years' time, if there's no deal, we exit without any agreement in place. And that does not put the UK in a strong negotiating position. It gives the European Union quite a bit of leverage, and you can see why there is debate around not triggering Article 50 until we've got a clear idea of what we'd like in place down the line. That, of course, does mean we're going to have continued uncertainty. That's not great for business. That's not great for job security. It's not great in terms of investment. But it preserves the UK's negotiating position, and there's something to be said for that. I suspect that whichever way this pans out, we're going to have uncertainty for a period of time, at least 2 years, probably considerably longer than that. Some are even talking as long as 5 years, even longer. And I suspect that at a certain point in time, business people will regard what we're in as the new normal, and they will adapt to that. So what does this mean for the insurance market in particular? Well, there are probably a number of immediate concerns to focus on. And the first one, which no doubt businesses will already have addressed, is making sure that they send out a strong message to all their key stakeholders that it is business as usual. And people talk about insurance business being very much a people business, and so a key message to send out is to staff, to remind them that whilst there is a lot of uncertainty, whilst there is all this political turmoil, the UK still remains a member of the European Union. And so in that sense, there is no change, and we should just carry on business as usual. There is, however, a degree of market volatility. It was quite extreme in the immediate aftermath of the vote to leave. There's been a rebounding in stock prices since then, but there's definitely been a knock to business confidence. There's been a knock to what people think the prospects for the UK economy are, and that volatility is having an impact on insurance businesses. It may well be that assets they're holding are falling in value. That could have an impact on businesses' capital positions. There may be concerns around the creditworthiness of counterparties, and these are all issues that insurance businesses should be focusing on right now, and to determine whether there's anything they can do to minimize that risk, by trying to hedge that risk, by trying to sell their way out of that risk. The other big issue to look at right now is the pipeline of deals, pipeline of new matters, pipeline of arrangements that are being negotiated. Do they still make sense to do that? If they do, all well and good. It's possible that counterparties may be looking to use the whole Brexit vote as an opportunity to exit those arrangements. So that's going to be a whole area of focus as well. And what about longer term? Well, it really depends on what kind of model we put in place with the European Union. At one extreme, as I mentioned, we may come out all together, sever all links with the European Union, and effectively will be in the same position as, say, the US or China. On the other hand, we may put in place a new trading relationship, a new model with the European Union, and it'll be interesting to see what access we then have to the single market in that situation. As I mentioned earlier, I don't think we can assume that we will get unfettered access for our services, for our insurance market, to the European Union without expecting in return free movement of people. And that's not going to wash politically, so I think there will be restrictions on the access that we have to the market. But all this remains to be seen. But one consequence of all of this, and particularly if we're going down the route of a full exit, is that the insurance market loses its passporting rights around Europe. Now, these passporting rights are really valuable because it allows, for example, a UK insurer to passport its services around the European Union, to set up a business in the European Union, in fact in the EEA, the European Economic Area, without necessarily having to seek local authorization, without having to stump up local capital. So it's a very valuable right. To lose passporting rights, this would be pretty significant. And businesses would need to consider whether they need to set up a new authorized entity in one of the other member states in the European Union or in the EEA. That entity would have to have its own local authorization, its own capital. One possibility would be to make that entity an SE, one of these European companies, which gives you flexibility in terms of migrating that down the line. Businesses would also need to consider whether, if their headquarters in the UK, whether it makes sense to keep those headquarters there. And you may see some migration of people out of the UK into another member state, particularly if there's a shift in the centre of gravity around Europe. And I think businesses generally will need to look at their business model. What is the right model going forward, given whatever trading relationship we're going to have with the European Union? What will that mean for their cost base? And these are all issues which businesses should be considering now. It is probably still sensible to adopt a wait-and-see approach, but things could move quite quickly. And so businesses really do need to have a proper handle on which way they might go, depending on how the exit looks. In terms of other issues, HR, what about people from other countries in the EU working in the UK? Will they be able to remain here? That remains to be seen. It's hoped that that will remain the case, but that is all a matter for negotiation with the European Union. And similarly, what about British citizens working in the European Union? Will they be able to continue to work there? Again, that all needs to be thrashed out as part of whatever negotiations take place. What about data? The insurance market generates lots of data, and that data can freely be transferred around the EU, around the EEA. What if the UK comes out? What will that mean in terms of data transfer? What about tax implications? If you have a subsidiary which is in the EU and we're no longer part of the EU, what does that mean? Does that mean that various tax breaks are no longer there? Does that mean that certain tax reliefs are no longer there? All of these needs to be factored into the overall consideration around what the new business model needs to look like. And what about regulations? Will we continue to adopt all of the EU laws that we've passed into the UK? What about EU laws that we haven't actually implemented but which take effect anyhow, such as European Court of Justice decisions? Will we decide to implement those or not? I suspect that we probably will maintain most of the European laws, not only because the UK has been a driving force behind a lot of them and it makes good business sense, but also because if the UK is to exit the European Union, then the UK wants to maintain equivalence. That will make life easier going forward. And if you take Solvency II, for example, equivalence is quite a big prize. We know that Bermuda has got that. It has been granted equivalent status. It's put a lot of effort into that. The UK will want to secure a similar equivalent status, which means that it's not put at a disadvantage with EU players. And so I suspect that the UK will maintain most of the laws, but maybe at the margins, without affecting that equivalent status, without putting the UK too out of kilter with the European Union. They may look to see whether one or two rules can be amended or repealed. But that all remains to be seen. So finally, what can we do for you? Well, we're keeping our ear to the ground. We are in regular contact with the market. We're speaking to government officials. We're talking to trade bodies, and we're trying to monitor the direction of travel. And of course, we will have further updates, further webinars, where we will update you on developments. But as soon as we get any sense of the direction of travel, a clearer outline of what it all looks like, we'll share this with you. The second area we can help with is around contingency planning. Now, some businesses will already have done a fair amount of contingency planning. This needs to continue. And this means not only looking at immediate issues, but also looking at new deals, new arrangements, new contracts being put in place, trying to Brexit-proof those. It also means looking at potential outcomes and what that might mean, and thinking ahead to all of those issues. I think thirdly, we can also help in trying to grab new opportunities. Yes, this is not ideal situation we're in now, and there's a lot of uncertainty, but there are also new opportunities. And I think these opportunities involve looking further afield. Of course, the European Union is going to remain important to the UK. whatever the outcome is. But we also need to take this opportunity to look further afield, to look to see whether we can develop business with emerging markets, to look to see whether we can collaborate, whether we can joint venture with other businesses in those emerging markets. This is a golden opportunity to do so, and this whole Brexit issue may galvanise that. I think it's critically important as well that the UK continues to be a centre of excellence, continues to look to innovate, to come up with new products to meet the demands of the insurance market client base. That's critical, and I think the insurance market needs to look at, for example, information technology, and to what extent can it harness that even more in its business. And if the UK remains that centre of excellence, then it will still be a place that other people want to do business with. But we have to focus on the bureaucracy in our market, and we have to make it easier for people to do business here. And if we can look for ways on cutting back on that bureaucracy, cutting back on the red tape, that will make this place a much better place to work with, and that's what we need to focus on. So finally, I started off with a quote from Lord Heseltine. Now I'm going to be finishing off with a quote from Lenin. Not John Lennon, but Vladimir Lenin, the Russian former premier, who said that there are some decades where nothing happens at all, and then there are weeks where decades of stuff happens. Well, I think looking back over the last week, we can say that a decade of stuff has happened. And I think the other thing we can take away from this last week is expect the unexpected. So we will clearly monitor developments. Things are changing on a daily basis. But as and when there are new developments, we will update you by way of further webinars. Thank you for taking the time to listen to me.